back, our colleague Nigel has gone all the way to the Prabhudas Lilladher dealing rooms and is in conversation with Dilip Bhat. Nigel, over to you.
Well, Sonia, thanks so much for that. The last time we were with Mr. Bhat, he told us that the markets are ripe for a big bounce back. That's precisely what happened, Mr. Bhat. Tell us now, we've seen an emerging market party. It's not only India. We've seen Brazil and Russia gain closer on 10 to around 15%. Do you think now, in fact, you see us struggling to get higher, or do you believe that we can move higher even from these levels?
Sure. I think, as what you very rightly said, for the emerging markets, it has been a synchronized kind of a rise. But more important, I think the FIs have come back, and we have seen that ever since the FIs have really come back, I think the markets have gained a good amount of momentum. And I think that is one big swing factor for the market, which is going to remain all throughout. That is something which is very chronic to the markets. So that's a very difficult call to take, that markets, whether the FIs will still continue to be a buyer, because they have a host of problems, which doesn't necessarily mean that it is India-centric. It is global, and India will just be a part of that. Having said that, I think markets possibly can go up by another 100, 150 points on Nifty, possible. But I would still think that going forward in the next couple of months, we will see a good volatility, and which can swing the markets back even downwards. That is very much possible. But people will be very keenly watching what is the kind of economic growth numbers from the various sectors which are emerging, which is ultimately going to complement the market growth.
All right, I take that point. Then fundamentals, really, they need to change if this valuation gap can catch up. But what about the DII flows? I mean, the last few trading sessions, we've even seen a 1,000 crore sell number. We haven't seen that in the last 9 months or so. What's your take? Are you seeing any kind of redemption pressures? Do you believe that some of those domestic funds, they are thinking about, let's book into this this rally that we're seeing?
So I would think some of these things are very much possible, a part of the profit booking, or LIC always has been a very major player in the markets as far as the DIs are concerned. I'm not hearing any great outflows for DIs at the moment, especially for the mutual funds. And I think the same goes even for the insurance companies. The money is flowing in, may not be with the same intensity. But yes, I think the DIs probably are trying to take advantage of the short term, because they have really pumped in a good amount of money even at the lower levels.
All right, Mr. Bhat, what about the mid-cap space? When we were falling down, people are running for cover. Now you think the FI flows are back. Do you think you'll be looking at that space? And also, as a house, you'll have been fairly positive on the aviation space. Crude prices have moved up as well. ATF prices, I mean, they're hovering around there. What's your take? Do you believe that the aviation space still is a buy, and also the mid-cap space caution, or would you start moving in again?
So let me start with the aviation space, which you have been talking about. I think that's a space that still offers a reasonably very good prospect of giving a good appreciation of some of the stocks which are there. I think all the three stocks are pretty good. Of course, Indigo is something which probably people will wait for this quarterly results, because the second quarterly and the third quarterly results were not up to the mark. And of course, there were some disclosure issues that came up. But I think that's a stock which still can give a reasonably good return in the long run. We have a buy report very specifically on SpiceJet also.
Okay.
I think as far as the aviation industry is concerned, the problem possibly could come, which is on the fuel front, is if the oil really crosses 55-60, that is where possibly they will have to take a price increase. But otherwise, the passenger load factor, even in the lean season, has been pretty good, which is very positive for this particular industry. So all in all, I think we are positive on this particular industry.
What about high beta? I mean, the fall was, people are calling it, vicious. But look at the bounce back. That's been very, very ferocious. Metal index, just take a look at that. Would you touch any of those stocks now? Or do you believe they've ran ahead of their fundamentals and you say, I'd rather stay out of it, I'd rather stay with the defenses?
Well, I think as far as the commodities are concerned, I would still stay away from that.
Okay.
Because we all know that China is still was a big consumer. And in the changed paradigm, I think things continue to look difficult for the commodities. There could be some bounce back here and there. There could be some short-term rise. Right. But it's very difficult to time it and play it. Right. So I think unless and until you're a very sharp short-term trader, I think I would stay away from that.
Final question, Mr. Bhat. Give us two stocks. Last time you gave us L&T and a pharma stock. Both of them do well. Final question quickly. Could you give us two stocks that our viewers could look at?
Well, I think Axis Bank is something which I think is ripe for a very good rise from the current levels. I think a lot of you know, the NPA issue which was there probably has got factored in. I would say a same little even for ICICI Bank also. I think we are in for a good run even from the current level because of the major selling which was happening.
Right.
I think as far as pharmaceutical goes, I think Cipla is a stock to look at.
All right. Thanks so much, Mr. Bhat, for joining in and giving us all those details. Back to you all, Sonia, in the studio.
All right, Nigel, thanks for that. Well, we need to take a break on that note, but we'll come back with some more.